Good morning, everybody, and welcome to our webinar here today with a joint presentation with Davis Benefits and Pension and me from Cove Continuity Advisors. So what we'll do here to start is just do a quick introduction from Katrina and I, and then we'll get on with our webinar. So my name is Shanna Lieber. I'm an insurance advisor with Cove Continuity Advisors based in North Vancouver, but we do serve clients across Canada. We're an insurance advisory firm, and we focus on planning and implementation of life, disability, and critical illness insurance. We value balancing profit and purpose as a B-Corp, and we pride ourselves in our transparency and accountability with the products we sell and the companies that we work with. We're very proud that in over 30 years, we haven't had a claim denied. And with that, I'll also pass it over to Katrina to introduce herself.
Hello, I'm Katrina Sinclair. I'm an insurance advisor with Davis Benefits and Pensions. We are an insurance advisory firm focusing on group benefits and group retirement plans. Our mission is to empower employers in better supporting their people, whether that's with custom flex plans, adding specialty providers, or educating and supporting employees in better understanding their plan. I personally enjoy bringing my healthcare experience to this industry and helping those in need when the time comes for support. And we are also a proud B Corp. With that being said, let's jump in. Welcome to our webinar, Empower Your Leadership with Executive Benefits, Unleashing the Synergy of Group and Executive Benefits of Your C-Suite. I'll let Shanna take it away.
Perfect. So executive compensation, that's where we're going to start with today. So in coming up with this topic idea, Katrina and I identified that there's a lot to talk about with group benefits and about individual insurance out there, but we sort of felt there was a missing synergy between the two, specifically for companies and C-suite compensation packages. So that's where we sort of came up with this idea. So executives bring a great deal of education, training, and experience to their positions. They're willing to take risks to move ahead both personally and professionally, and they assume a tremendous amount of responsibility in the process. Executives make substantial contributions towards the operation and the success of the business and ultimately to the shareholders. So to achieve the strategic goals, companies often rely on the abilities to recruit, reward, and retain senior executives. That ability is often shaped by the quality of the compensation, the benefits, and the retirement packages. A strategically sound compensation benefit and retirement plan is one that's well designed and properly managed, and it directly reflects the corporate culture. So really then what matters? So an executive benefits program is designed to provide the corporation's key people with a benefit package that has the level of quality that recognizes their true value to the corporation. It enhances the pension, the disability, and the life insurance of a current plan, and can also bring to the table additional benefits such as critical illness and tax and estate planning. So why might you consider an executive benefits program? So it's designed to provide the key people with a benefit package that recognizes their true value to the corporation. Like I mentioned, it enhances the pension, disability, and life insurance, and then it leads into the tax and estate planning, which can also go along with it. We also believe it's valuable with the unrestricted design flexibility. So really you can enhance it in many different ways depending on the corporation and what the need is of the company or the executives that we're working with.
So let's start with group benefits. They're a great start, and likely you already have a group benefits plan that we're looking to build upon, but want to just set the foundation. How is group benefits different than individual health and dental plans? So the first thing is there's no medical underwriting to join the health and dental plan. On some individual health and dental plans, you may be asked medical questions as well as pre-existing conditions may not be covered. So with the group plan, no medical questions to come on to health and dental. And it's more coverage typically on a group health and dental plan than an individual plan. So individual plans usually have higher caps, less coverages when you get into the nitty-gritty of per visit maximums and things like that for massage. And group health and dental coverage, because they can group everyone together, are allowed to provide more comprehensive coverage, as well as the premiums. It's more affordable on a per person basis to be part of a group than to stand alone. So therefore group benefits can come at a more affordable cost than individual coverage. And there's always conversion options that if you were to leave your employer, you can convert your health and dental to an individual plan within 60 days. Sometimes they match up, apples for apples, sometimes they do not. As group benefits does have more comprehensive coverage, you'd be transitioning into individual. But all in all, group benefits, more people, more coverage, better benefits. So with that being said, let's talk about what you likely have right now. And that is classes of employees that may have different benefits. And what that means is your entry level employees may have one set of coverage, mid-management might have another, and your executives may have a top tier plan, which includes 100% health and dental to make sure that they're taken care of. And it may also have increased amounts on the life insurance and disability with different maximums and things like that. But what we always need to make sure that we're aware is the maximums of where there is the gaps, because with group plans, depending on your size, there is certain thresholds that the insurer automatically approves. And we need to make sure that your executives are aware of those gaps so that if something happens, they're not surprised about possible undercoverage. And that's where with the group plan, there's lots of different things, but there's more flexible features in individual. So I'll let Shanna take it away.
Perfect. So then what are executive benefits? So executive benefits, they allow an organization to offer a benefit plan to executives that's separate and distinct from regular group employee benefits. So why is this an attractive option? So it's a value add to the overall compensation package for the executives, and it really does help to bridge the gap to better protect the executive's income, family, and financial future if they suffer an illness, disability, or premature death. So it does guarantee premiums for the term length of the product, which helps with corporate budget planning for CFOs as the premiums don't change annually. And it would be structured and tax efficiently, offering tax deductions to the company. So what can be included in it is individual life insurance, individual critical illness, individual disability, which is income replacement. It also can be included as key person coverage to support the company. And both of these things can be looked at the same time when going through underwriting, which is a pretty big benefit.
So let's do a quick comparison. Group, on your group plan, you'll have your executives classed out with higher coverages, 100% health and dental. And what is going to change is the annual renewal with your group benefits. That it's based on usage, it's based on group size. So you're going to see the rates and costs change year to year. But because everyone is grouped together, there's more affordable cost and more affordable premium. When we're talking about the personal individual side, these are typically going to be with top-up plans to complement the group, and that can be in the form of a term policy, which would be a flat amount, or a permanent policy, which could be a growing amount. And so just like Shannon said, there's guaranteed premiums, so no fluctuation. However, with the increased customability comes with increased cost, so a little bit more expensive.
All right, so features of a personal insurance. So like we said, group benefits are a great start, but they do have some limits in terms of coverage, insurability, and some underwriting that we'd like to identify. So when talking about an enhanced compensation package, we do see a lot of value in including personal insurance paid for by the company. So the benefits of it includes enhanced coverage, which really does help to bridge the gap between the group plan and a comprehensive coverage sought out by many executives. The additional financial security really offers an extra layer of protection for executives when looking at a compensation package. And portability is a huge benefit, as if executives leave the organization or retire, they can take that policy with them and then take over the premium payments of that. So once they've done the underwriting, the policy is theirs. It does help to bridge the income replacement gap, as an individual policy can provide higher benefit amounts and often have more comprehensive definitions and more optional riders. So this really ensures that executives can better maintain their standard of living in the event of disability or illness. Guaranteed insurability is also a benefit, as once the policy is issued, the executive's insurability is guaranteed regardless of any changes to health. So once the underwriting is done, the policy is theirs. If they suffer some kind of health issue, they would get the premium payment, or they would get the payment of the benefit since the policy is theirs. And finally, underwriting. If the underwriting is completed for executive benefits, the insurance can also be used for business protection insurance. So if the company is looking at seeking out key person insurance or business overhead, where if something happens to an executive, money can then be injected into the company to either recruit somebody new or to just keep the business afloat while the executive is recovering. So, how do executive benefits work? So, we'll talk about life insurance first. So, how it can help with the financial stability and the executives and their families in the event of premature death, and how it can help above and beyond a group plan. So, for life insurance, it would be a higher amount of life insurance, and it can be a term product or a permanent, depending on the insurance need. So, in the event of death, the benefit is paid tax free to the executive's beneficiary. The premium is paid by the company. So the premium included would be included as a taxable benefit to the executives, and it's a deductible expense to the company. So cash value life insurance strategies can also be utilized. It's a little more complex in planning, but that's one of the parts of the job that we love to do is planning. So if that is ever of an interest, that we would take that further and look into that as an option. And income continuation for the family, estate planning, and retirement focused, which is the purpose of having a higher life insurance benefit. And the amount can be extremely customizable. We've seen examples of 2, 5, 10 times salary for a term 20. We've explored permanent options. It really just depends on the situation at hand. And really, it's to provide income to the surviving spouse or family. It can be used to pay off mortgage debt, estate planning, final death of taxes, a charity, kind of keep the company afloat. There's a lot of different uses for a higher life insurance benefit for an executive.
Great. So we've talked a bit about life insurance, building it on the group, extra policies that you can top up with on the personal plan. Let's pivot into some of what we call the living benefits, even though life insurance you can access, and Shanna can get into that once you talk to her about all the ways you access life insurance while you're living. But let's talk about disability planning. And so we've created this little visual aid to talk about the timeline when someone becomes disabled. So the red markers stating date of disability, which can be a Monday, it can be a Sunday, it can be a Saturday. That's day one of the timeline. And as we go into someone not being able to work due to me being medically disabled, we then look at what benefits that they're accessing. And the most typical one would be EI sickness benefits. This is a government subsidy, which is now 26 weeks. As of December 2022, the government extended it. It used to be 15 weeks, which is about 4 months. Now it's 26 weeks, which is about 6 months. To support people while they're off. And EI sickness benefits would be assuming that you do not have a short-term disability plan. If you do have a short-term disability plan, they would be going on that benefit instead of EI sickness benefits likely. So when we're talking about this timeline, we're then also going to talk about critical illness and when that pays out. So we'll get to the next slide here. So let's talk about day one. They're using their sick time, vacation time, as EI sickness benefits does have the 1 week waiting period. So they can utilize anything that they have in the bank with the employer. And then EI sickness benefits, the process is basically providing a doctor's note. Doctor says, Katrina cannot be at work until December 1st of 2023, and EI would likely process that. They don't ask very intimate questions. If the doctor says you're off, you're off. One thing to consider is the decrease in income that the person will feel, the disabled person will feel. So if somebody's making 200 grand a year and all of a sudden goes on EI sickness benefits, they're going down to $63,000, but in the 60s, which we all build our lifestyle according to the income that we make. And so mortgage, Wi-Fi, groceries, car payments, gas, all these different things that can be really detrimental to somebody losing over half of their income instantly because they cannot work. So what we want to talk about today is your strategy if one of your executives do go off. Do you have a support plan in place, regardless of the nature of disability? Because there are different ways to build in supports before somebody and be a little bit proactive on the side before someone goes off on disability. Because once somebody goes off on disability, it's a lot of reacting. What can we do? What are the numbers? And everybody kind of running around. So this is one of the things we wanted to make sure that we brought up in this webinar is, do you have a plan just in case that CEO is off tomorrow, that CFO is off tomorrow? And there's some really good resources with mental health support, case management support that you can really lean on to keep an arm's length away from the medical information. Because as an employer, you do not want to dive into medical information just for liability, but you can hire these third-party adjudicators to help you navigate supporting the employee as well as accommodating them in a possible return to work. So having a plan, and that's where executives off for 1 week. We know there is no short-term adjudication with EI sickness benefits, but there are other things that could help this person while they're away. One of them being critical illness. And we'll talk about that in just a bit. But what we want to talk about today, sorry, Shanna, got a little ahead. We're going to be talking about these short-term adjudication models. So before the executive goes off on leave, the different, can you go back a slide there, Shanna? Sorry.
Yeah.
So the purple and the orange blocks. So short-term adjudication. So the employer or the employee goes off. Do they have the necessary support? Is there different things that they could engage with regards to mental health, maybe even addiction services? And so that's where there's certain providers that you can sign contracts with, have all ready to go, pay $0 if they are not engaged. But if that executive were to go off, then it's automatically deployed to go support them, coordinate medical, all this kind of stuff, so that there's that third-party mediator between the employee who's off, making sure they have the support, as well as coordinating that return to work, or even if there is WCB or any other more complex scenarios. And so just wanted to plant that seed that there are different things that you can plan for as a preventative model that only get billed once the person is off on disability and utilizing those third-party services. So now, sorry, I skipped ahead, Shanna. We'll talk a little bit about that critical illness piece. So, critical illness. It can be set up on the group plan, mandatory or voluntary. So what this means is mandatory, everybody has to have it, and it's up to you to have it employee paid or employer paid. And voluntary, you can build into the group plan benefits that somebody has the option to opt in to it and take it, or they don't take it if they don't want it. Those voluntary plans are typically 100% employee paid. And what's the value of critical illness is that lump sum payment deployed to that person when they're off with a recognized condition or an eligible condition. So if they have a heart attack and it's qualified under the critical illness, 30,000, 25,000, whatever the lump sum payment is a check is cut to that person, and that can help subsidize them while they're off on EI sickness benefits. So it's the ability for them to top up that gap in coverage. And so it can also help with other financial burdens or accessing extra treatment. Once that check is cut, they do not police how you spend those benefits. So some of the benefits that are there to include with the group coverage, there's no medical underwriting to gain access to this critical illness coverage. It is more affordable premiums. There's no pre-existing clauses. And there's the ability to be portable. However, there's caps on the dollar amount that you're able to obtain in these group policies.
Perfect. So that's where this whole synergy that we've been talking about between a group and an executive plan, we think can be super valuable. So, as the same as the group options that where the critical illness is a tax-free lump sum would also be included in a personal plan if we were looking at an executive compensation package. So, how it would work for critical illness is similar to what Katrina said. If an executive suffers a critical illness, a benefit is paid out tax free to the executive. A critical illness policy covers 26 conditions, and they're all standard across insurance carriers, but the main four are cancer, heart attack, stroke, and coronary artery bypass surgery. It also includes things such as Alzheimer's, Parkinson's, MS, brain injury, and the rest of the others I can always review if anybody had any questions. So the way that it would be structured with a personal plan as part of an executive compensation package would be the premium would be paid by the company. The premium would be included as a taxable benefit to the executive, but it would be tax deductible to the company, which is always appealing. If the executive is also an owner, there are some strategies to consider that we could work through, which would include a return of premium, which really does then uh, kind of help mitigate the cost to the company and has some unique strategies for specific owners. So it can also be used for business planning, as I had mentioned earlier, where if you had a critical illness policy for the executive, but also for the company, it could then inject money back into the company if the executive suffers an illness. So it has dual purposes, one to keep the company afloat and to also support the family and the executive to recover. And really, as I mentioned here, that it is recovery focused. It's the purpose of a critical illness policy is to help alleviate the financial burden that is likely going on for the executive and their family at that time. It can help supplement the disability income. It can allow them more time off to focus on recovery without draining retirement savings. And it can also inject money into the company during this time. So it really does help just to further bridge that income gap replacement, which we mentioned for the high income earners.
Okay, we've talked life insurance, we've talked critical illness. Let's talk about that long-term disability planning. And so when we're looking at long-term disability, we're looking at EI sickness benefits. It's near the end. So some clients and employers have adjusted their long-term disability waiting period to align with EI sickness benefits so that that green bar starts when the blue bar ends. However, keeping in mind that there is no case management with EI sickness benefits, it's Davis's recommendation to not alter this waiting period because you're going to get a higher long-term disability payment for the individual, typically more than EI sickness benefits, and get that case management support model so that if there is the ability to return to work, you've got somebody there who can also engage with the short-term case manager as well as the long-term case manager to brainstorm accommodations, different supports for that person. And so if you do still have the normal 112, 119 days of disability as your waiting period, the adjudicators at the insurance company will do their calculations for the correct payment for long-term disability because basically the rule is you can't be making more money off on disability than you can at work. So, and one thing to note that's built into all group benefit long-term disability plans is this definition of own occupation versus any occupation. So the first 2 years of that long-term disability claim being adjudicated, the case manager is looking at what was your job before, and they look at the job demand analysis to say, okay, if they're an accountant, writing on the computer, high cognitive tasks, and being able to communicate properly, and then looking at your functionality and how your medical condition is disabling you. And so they do a direct comparison. Does the heart attack or maybe the stroke directly relate to you not being able to do your own job? And if the answer is yes, the claim is approved. What changes after 2 years on claim is the adjudicator looks at things differently. They're not cross-referencing your own job anymore as an accountant. They're looking at any job within the realm of reasonability of, is it within the same job class, not job class, pardon me, but within the same realm of education as well as take-home pay. And so they're now doing a different comparison after the 2 years on claim. And then they're adjudicating like this moving forward all the way to age 65. So one thing that we're talking with employers is adjusting this definition and looking at alternates such as residual disability or partial disability, where it supports the claimant sooner, as well as return to work models, making sure that if they can stay at work, we do everything that we can to keep them at work, compared to fully going off and then having to wait on EI sickness benefits until long-term disability kicks in. So that's an interesting part of disabilities, pulling back all the layers to make sure that the plan that you have in place is there and ready to support your people in their time of need. So last thing I'll say on group disability is making sure you're aware of the thresholds that may be in place. So this is depending on your group size. Smaller groups, say if you're 20 people strong compared to 200 people strong, you're going to have different limits built into the group plan. And that's across all carriers based on group size. And what I mean is, what I reference here is non-evidence limit. So basically the insurance company auto approves a monthly limit for everyone to receive. That may be $3,000, it may be $4,000. It really depends on your group. But what we want to make sure is that you and your employees are aware of this gap. If someone is making 200 grand a year and they think they're covered for 67% of their income, and they have not referenced this non-evident limit, they are going to have a very big shock when they go off on long-term disability, saying 4 grand is only 40% of my income, not 67. So we always want to make sure that if your group is on the smaller side, that you're aware of these non-evidence limits. As you get larger, these limits, because there's so much spread of risk, don't apply. Insurance carriers are willing to cover a little bit more, but it's making sure that all the insurance is set up before the house is on fire.
Awesome. So then again, how we link this to the synergy between executive benefits and group benefits. So if we're looking at the disability for executives, we really believe that having a plan like this above and beyond a group plan can help financially support executives and their family if they're unable to work, because we firmly believe that your biggest asset is your ability to earn an income, and if that's taken away, then really lifestyle can drastically be implicated, as well as future retirement planning. So how do they work for disability? So it really does bridge the income gap to fully ensure the income above and beyond a group plan. And one of the unique things about looking at an individual policy is that it can ensure different types of income, which is often the case for various executives. Sometimes there'll be salary, sometimes there's commission, there's bonuses, there's different ways that executives take an income from the company if they're owners. And looking at an individual plan can better look at all of the sources of income that are taken into account to ensure that, versus just maybe a small amount of salary that's being taken. So we recommend that executives in general would apply for an individual disability plan. And that if they're uninsurable or there's some issues in going through underwriting, then they can opt into the group benefits plan that's being offered with the company, because it's often an easier entry level to get into that benefit plan. So there are some options there. What we also really like about these plans is it's a guaranteed premium to age 65. So that's, as we mentioned earlier, for some of the other policies, it's an ease of planning for CFOs and for budgeting each year. It doesn't matter if somebody goes on claim, the premium is still going to be the same, which is a huge value add. So if there's more than one executive, we can look at what's called a wage loss replacement plan, which does offer some premium discounts. And it's just a unique way to structure these plans in the most tax efficient way. So for a wage loss replacement plan, the company pays the premium, The benefit is taxable to the executive only at the time of claim. So there's nothing being taken off the paycheck or anything like that. And what's a huge benefit then is the premiums are tax deductible to the company. As I mentioned, tax efficiency, always something that we like to hear. So the policy itself is non-cancelable, which means that it is the person's policy until age 65. The insurance carrier cannot take it, cannot change the premiums or anything like that, which is awesome. We include the residual and partial disability, which really just allows for more likely to issue a claim if there's an executive is suffering an issue where they're only able to work maybe half time, or their capacity is reduced due to some issue where they can only work maybe 30% of the time they usually worked. So it does help to cover that. And the definitions that we talked about, we would include a regular occupation to age 65. And if it is of an interest, we can also include an own occupation definition, which is the highest kind of branch of definitions to age 65, if that's of interest to the executive as well. So basically, it's a very a la carte policy that we can look at what is important to the executive, what is important to the company to make sure that they are fully covered above their group plan. It is portable, so if the executive retires or leaves the company, they can then take over premium payments, and this policy is still theirs until age 65. One other really important part that we like to include here on these plans is what's called a future insurability option. So what that does is if the company or the executive is earning much higher income over the years, they can then increase the amount that they can receive on a benefit without any medical underwriting. All they need to prove is that the company or that they are earning that much more income. So really, we just believe a more comprehensive policy means more likely for a policy to pay out when something happens when you need it. So more coverage means more stability for executives and in a compensation plan.
We've talked life insurance, we've talked critical illness, we've talked disability. We just want to talk a little bit about health and dental before we finish up here. And I know Shanna has a couple extra points, but this is a really exciting program, and there's a couple providers out there that are doing this, and it's executive medical concierges. So it's priced like an EAP or a telemedicine, and it's per employee per month. So there's different rate for a single, for a family. So these are just kind of rough numbers, not exact numbers, but to give you a taste of what the cost would be. And this is something that you can add for your executive class to make sure that they're supported not only while they're on disability, but before maybe they're having symptoms. Maybe they are the executive that runs triathlons and just wants to biohack left, right, and center. This is something where they have a medical concierge to say, I would like to do executive medical appointments. And that's a 5-hour medical appointment with a stress test, all the different tests to basically do, it's a very high-end physical to make sure that everything's running well, blood work is good. If they have musculoskeletal issues like a shoulder that they need repaired, like a rotator cuff, and they're still waiting for an MRI, these concierges have access to lots of networks to actually push you up in the MRI list. So you can go from a 6-month wait to a 2-week wait on MRI. You might have to get up at 1 a.m. in the morning for a 2 a.m. scan, but they're getting you in there, which is great. And there's also some really exciting technologies out there for the full body MRI that I know is available in Vancouver. So getting a full scan just to look under the hood, make sure everything's okay. So this concierge service gives them access to coordinating with the right partners. The actual cost of the MRI, if it's the full body MRI, that would be out of pocket. For a shoulder, that would be covered under normal health care, but they're helping coordinate the appointments to make sure that executive is feeling empowered for where they're currently at, whether it's preventative and biohacking or it's reactionary, getting a rotator cuff repaired.
Awesome. There's just so many things to consider when thinking about what kind of benefits to offer. It's a little overwhelming, but that's sort of why we're here to let you know what some of the options are and narrow some of them down. So in general, then in summary, why would you consider executive benefits for your company's executive team? So we really see it as a powerful tool in keeping your company competitive and attracting and retaining excellent executives. group insurance plans definitely provide some level of financial security. And although we just really see that it might not necessarily be commensurate with the compensation of senior level employees and executive staff. So offering executive packages and supplemental individual life, disability, and critical illness insurance policies, they offer added compensation, financial security, and just really an overall really great package. The strategies are extremely flexible and customizable. It can be based on budget, based on desire, and just really what is of interest to you, the company, or what you'd want to be able to offer. And I really think now when people are out there looking for companies they want to work for, these things really matter. And I know that people are looking for what additional things above and beyond the compensation are available. And ultimately, when you're offering these as a company to your executive team, you're really showing that you care in more than just what they offer at work. You care about their family, about their financial future if anything were to happen. And it really is just a nice add on, all of these things that we've talked about. So that's it. That's all that we have for you today.
Yeah. No, thank you so much for coming and joining us. We are here to answer any questions that anyone has. Our contact information is there. Shannon and I are both very active on LinkedIn, so feel free to connect or follow, and we're happy to share our knowledge with you. We are two nerds for insurance, but what we really pride ourselves is helping empower people with the knowledge of insurance. It's a web of complexity, but with our clients, basically they come and say, I want to support my people and this is how. They tell us the dream and we build it back for them to make sure that everybody's good for the now and for the later. So if there's one takeaway that we want to instill in you from this employer is, who are your executives? How are you taking care of them? And what happens if they can't come to work tomorrow? And so
exactly. Awesome. Well, thanks so much, Katrina. And thanks everybody for attending. And we look forward to seeing you at hopefully the next one where we look at some other topics that are similar that might provide some value. Thank you.
Take care.